Hey there, friends. Welcome back to Random Gleanings. It is Thanksgiving week, and hopefully you've got plenty to be thankful for. I know we do. We've got actually some positive news to talk about today, at least to start. And so, Chris, kick us off with the four-year presidential.
Yeah, so, if you look at the start of the presidential cycle, we've had some seasonality through the third quarter. And the question is it turning now and kind of starting back up? I mean, we've had a positive few weeks, which is nice.
Mm-hmm. It sure is. I will go ahead and step in front of the freight train that it will likely come our way, because presidential cycle or election years generally bring out a lot of vitriol. But on average, not saying that's going to happen next year, but on average, those years are actually pretty good.
Yeah, I mean, if you look at the 4-year election cycle, we're in year 3. Year 4 is next year, the actual election year. And what you find is number 3 historically since World War II has been the best performing year. The second best performing year has been the actual election year itself.
Yeah. I'm not looking forward to the news cycle, but we can at least be encouraged that on average, markets do okay in that year.
Yeah, and I mean, there's some, as you said, we're going to start with some positive things. I mean, there are some sort of a little more sobering kind of things as we get toward the end of our slides. But the good news is next chart this week. The bull market behavior checklist got a little bit better. A couple of weeks ago, it was 2 out of 9, so getting to 5 out of 9 is good. We're moving the correct direction.
That is right. Yep, absolutely. Another topic we wanted to touch on was smaller companies having, I think maybe I'd said in a recent episode that they had dislocated from their bigger brethren over the course of last year. And this next slide shows how cheap they've gotten. Cheaper than they've been in 15 years.
So obviously the visual, you can see they haven't been this cheap since around 2009. If you look at it in a number format, they're trading at about 80% of their normal price to earnings ratio, whereas large companies are trading at about 120% of their historical ratio. So yeah, they're cheap relative to history.
That's right. And they've got some seasonality as well, right?
They do. In fact, our buddy JC Peretz calls that out here, that it would be normal for small caps to start doing well. In fact, it would be odd kind of if they didn't, if you look at seasonal patterns going from 1979 until now. In fact, next chart, and this is the big version of the same chart, you can see that they kind of go sideways and start into January kind of strong. We'll see if that happens this year. I mean, I know we definitely own small caps for our clients, which is fantastic. Obviously if it works.
If that works, that's exactly right.
Yeah.
But again, I think the comfort in owning something like that right now, and this is not advice, but is because of that valuation, it's as if they've been priced for kind of a worst case scenario, whereas other parts of the market are, and we'll look at this, are priced for, kind of optimistic views of what may happen.
So there are strategists and fund managers out there that have made the point that the companies are already so beaten up that if we did have a recession, they'd be cheap. If we have a recession, small caps certainly wouldn't just stand there and weather that.
Agreed.
They would get beaten up too. But next chart from our friends, also at All Star Charts, it was October CPI day last year in 2022 where small caps jumped, and that was right near the bottom of the market at that cycle. Now, the interesting thing is from there, large companies
large caps that really did well. Right, yeah.
These are all small companies, and you can see from October CPI day in 2022, that's November 10th, 2022, until now, stocks are the small caps are lower.
Basically, almost flat, but lower actually.
Yeah.
That's true.
So, ultimately, will they participate? I mean, they're overlooked relative to their big brethren. So, historically, that begins to change, at some point, whether it's now or later.
Yeah.
All right. So, to the more slightly somber news. This next slide is from our friend Warren Pies, and he talks about when the Fed actually pauses raising interest rates, which their last raise was what, July?
That's right. Yep.
So, there was speculation at one point that there would be another raise in December, but it really doesn't looks like that's off the table at this point.
Yep.
So, first point he makes is new all-time highs are rare during the Fed pause phase. There were 2 times it happened, 1995 and 2007, that you got new highs for equities. And it's been like 480 something days since we had a new high for the S&P 500.
January 3rd of 22. So yeah.
Yeah. And he also makes the point that at this stage of the cycle, hard and soft landings really look the same. You can't tell whether you're going to get a good outcome and everything's going to be fine, or whether it's going to be more dicey. He does say, though, that markets are priced for a soft landing.
I think that that's right. And that's where, again, valuation matters, right? And why perhaps things that are under their historic norm valuation look a little bit more attractive, because if things aren't, if the soft landing does not occur, then it's likely that even just from a price to earnings multiple compression, that those larger stocks would have to come back down to earth a little bit. So.
Right. So next chart is U.S. manufacturing PMI, which is the Purchasing Managers Index. And the little gray bars on the screen are when we've had a recession in the U.S. And what you'll see looking currently is that we have been, so if you're above 50, you've got an expansion going on. If you're below 50, you've got a contraction going on, meaning a slowdown. And manufacturing is 25% of the U.S. economy.
I think that's right. Yep.
So, I mean, it's not the entire economy by any means, but basically we've got 12 months of manufacturing contracting. If you go back and look at other periods of time, 1990, 91, 2001, 2008, 2009, you get up around this time period of 13 to 18 months. I mean, there have been recessions. And
it's at least something to take notice of because of the historical warning sign that it has created, right?
Right.
And that's what we're trying to do, and to your point, be balanced. But, there are some positives and there's just some negatives. It has been an interesting year, to be honest with you, because there's been a lot of cautionary signals throughout. We're still in an inverted yield curve, right?
Our friend Darius Dale from 42 Macro has been pretty dogged that you ought to see a recession commence sometime between November 2023 and April of 2024. And his rationale is, well, historically, when the yield curve stays inverted, then you end up with a recession sometime between 13 and 18 months since the inversion. And it inverted October of 22 on the 10-year and 3-month bond.
Right. And I think, to be, very candid, I think people have been looking for this recession for quite a while.
Yeah.
And I think that's an inflation number. I think that's an inflation thing, right? Because we've all felt that pressure.
Right.
And yet, again, there's been some signs that would point to the economy having to slow down, and the tightening process that the Fed has done would encourage that. But again, let's get back to some positive news. What are you planning for Thanksgiving?
Man, I'm gonna do a meat church recipe. I'm gonna do. I've got some of that. I can't say it right. Tony Cachere's or whatever it is. It's a Cajun marinade that you inject into the turkey breast.
Nice.
And then you put holy voodoo on the outside, which is just a seasoning. And then you smoke them up, man. How about you?
I'm smoking too. I'm doing, I think, 35 pounds bird on a smoker and serving up, that. I think, for 21. So
holy cow.
It should be fun. It should be fun.
That's awesome. Yeah. Well, I'm grateful to you. You're a good business partner, and thank you for all you do for PP&W and for our clients. We're thankful to you for watching and listening, and please do share if this is useful information to you. Click the subscribe button. I get little notifications at the bottom of my screen when people that I really pay a lot of attention to on YouTube post, and it's super helpful to catch things that are interesting. So you got anything else?
Nope. I just want to say happy Thanksgiving. We're just so appreciative for all of you, and we look forward to seeing you again next time. Thanks.